Good morning. This is Joe Pollock with Technomic. We've had a little technical difficulty. You've probably seen slides move. And so we're going to start from the beginning. I am on audio now. Good morning, and thank you for joining us for our Technomic Talk series and our topic on the food industry broadly and the first quarter of 2015. And what we've done in the past is we've focused on special interest topics such as sustainability, impact on online purchasing and prepared foods in supermarkets. But over the next few webinars, we'll be providing more updates on key occurrences and activities over the past forward in the broad food industry and what to expect going forward. However, as our industry does have a number of big occurrences and news that does happen, we will continue to intersperse special interest topics into our discussion topics. And again, my name is Joe Pollock, Senior Vice President with Technomic in Chicago. So let's first talk about the economy and what's been happening with the economy, because obviously it does impact the food industry. We've seen a lot of positive news coming across the wires over the past quarter. Disposable personal income, which is the amount of income consumers have in their pockets after paying taxes. This has been rising at a more accelerated rate than we've seen in the past. This obviously leaves more money in consumers' pockets to spend on discretionary items. We're seeing unemployment continue to drop, and now it's at a 5.5% rate. The producer price index for food, or food inflation overall, is down 1.4% year over year in March. Fuel prices remain low due to oversupply, and the expectation is they're going to continue to drop for the foreseeable future. We're seeing low interest rates continue. However, there are some hints of increase, but given the latest GDP report, which had GDP growth in the first quarter of only 0.2%, there may be further delays in any increases. So we'll continue to watch that. We see the stock market, it continues to be at record highs. Although we've seen a little bit of a drop in consumer confidence, it does remain relatively high compared to where we have been. When we look at consumer spending habits, they continue to be very bipolar. We're seeing strong results at both ends of the value spectrum. So if you look at results in companies at the higher end of the spectrum, whether it be BMW or Mercedes-Benz cars, or Apple computers, iPhones, Apple tablets, or premium luggage from makers at Toomey, had very strong financial results over the past quarters that they've reported. Then you look at the more value end, stores like Dollar General or Costco Wholesale, or then you look at Burger King or car maker Hyundai, all have performed well as well. This kind of tells us that the middle market is an area that offers neither value in terms of price nor premiumization. This is one that's going to continue to have some difficulty. As you know, we look at consumers are becoming more bipolar in terms of shrinking middle class. These are the two areas overall that are going to continue to do well, both at the premium end and what we kind of call the value end of the value spectrums. When we look at the food retailing portion of the market, it continues to move towards more non-traditional outlets. Now, if you look at the traditional retailers, they continue to struggle, and we've kind of put their Kroger and even Publix are excluded. If you look at same-store sales, Kroger was up latest quarter that they reported up 6%, Publix up 6.4%. But then if you look at people like Ahold and Walmart, only up 0.4% in same-store sales, Walmart up 1.5%. We're seeing more of a shift towards specialists in this area, whether they be fresh or natural stores. People like Whole Foods were up 4.5% in same-store sales. The club store channel is doing well, led by Costco. Same-store sales up 8%. Seeing more on the online side, people like Instacart, as an example, doing really well, direct home delivery. And then dollar stores, as I mentioned earlier, that's another segment that's doing well. So, net, we see total retail up in the first quarter, retail food sales up 2 to 3%. And given the relative flatness on the traditional retailer side and then the shift towards more specialists, basically we're seeing specialists taking share from the traditional retailer sector of the marketplace. Now shifting to food service, it's being driven by the more dynamic segments, whether it be fast casual. We're seeing growth in lodging continue. The supermarket prepared foods area, where you see the prepared foods, the deli prepared foods, or the restaurant areas. Also senior living is another area, as retirees are going to senior living centers, whether it be independent living or assisted living. These are also fast-growing segment. We're finally seeing recovery within the casual dining segment when you see people like Applebee's and Brinker and Texas Roadhouse starting to see some consistent growth in same-store sales. But then on the other end of the spectrum, when you look at the traditional quick service players led by McDonald's, they're continuing to struggle. So you're looking at food service overall in the first quarter up about 4 to 5% based on our latest numbers, and then restaurants overall up 5 to 6%, driven primarily by fast casual and casual dining. One thing we are seeing, though, however, is that year-to-date inflation within menu price inflation within food service is up almost 3%, which is the highest that we've seen since 2011. Operators are feeling a little bit more comfortable taking menu prices. Consumers are a little bit more flush with cash, and the economy improves. One of the big things we saw in the first quarter was the mega merger announcement of Kraft and Heinz, which will create the 5th largest food company in the world, totaling $28 billion in revenue. This merger is backed by Berkshire Hathaway and the 3G Group. And this was obviously the same group involved in the Heinz acquisition, and 3G was behind many acquisitions, including the Tim Hortons as well as the Burger King acquisitions earlier. They are planned to slash about $1.5 billion in total costs. Heinz takes a zero-based budgeting approach. They look at each department and each area annually, and each area has to justify each cost area, start from zero and build up their costs, and they see this as the most effective way of justifying costs in every area of their business, and they think this is the most effective way of running their business efficiently. Overall, this mega merger comes at a time when large CPG companies overall are struggling for top-line growth and are reevaluating their portfolios. So it's very interesting that this mega merger occurred at this time, and given the success of this, the eventual success, others are watching, and this could lead to more mega mergers among other companies in the near future. Now we have another mega merger that's been pending over the past 18 months, is the Sysco U.S. Food merger. And as we speak today, the attorneys face off from Sysco U.S. Foods with the FTC in federal court to try to salvage this mega merger. And the prospects for this deal all hinges on the court ruling, which should take, they believe, about 7 days of testimony between the two groups. And the loser of this court ruling is expected to drop their case. So if the FTC loses the case, then they'll drop their case and the merger will go forward. And if Sysco U.S. loses their case, they'll drop their the pending merger. And the final decision is expected within the next 30 to 45 days. So this will wrap up relatively quickly in terms of with a final decision and the final outcome of what will happen with this potential merger, whether there will be a one Sysco U.S. Foods or we'll see two different organizations moving forward. McDonald's, a lot of news with McDonald's with their well-publicized woes, both within the U.S. and then globally. They announced a new CEO, Steve Easterbrook. There were a number of new initiatives that were announced yesterday that really didn't wow investors or industry watchers. They talked about a refranchising effort, their efforts to sell company stores to franchisees. They announced also a new organizational structure to get new ideas from markets and to markets much quicker. They've done some other things previously, such as rationalizing their menus, introducing premium burgers, and there have been some rumors about all-day breakfasts. Certainly these are some smaller steps. There probably will be some larger steps to come. However, everything that's been done to date has really not wowed the marketplace. However, looking forward, we do expect some new big news to happen from McDonald's as they look to get back on track on a growth trajectory. One of the things we've really noticed over this first quarter of this year is that really when we look at the idea of the thought of what we call pure foods, consumer demands and reaction to these consumer demands have really intensified. And the terms of fresh, natural, organic, or clean, or whatever you want to call them, those are becoming much more prevalent, in the reaction by whether they be restaurant chains, whether they be retailers or manufacturers, have really become more prevalent. And those are things such as no additives, no antibiotics, no high fructose corn syrup, or no added colors, artificial flavors, preservatives, GMOs, pesticides. Those are all things that we're seeing more and more emerge in the marketplace, or at least being more defined in the marketplace. And what we're seeing again is about what foods do not have compared to what they do have. So it's, again, taking out things that aren't necessary or what consumers believe may not be beneficial, and we're seeing more and more of that occurring in the marketplace. Now, part of this is that there's some distrust within the especially among consumers of big food, so to speak, of big food companies, whether they be retailers, manufacturers, or restaurant chains. So many in each of those groups are doing are getting into the act to mitigate this distrust. For example, Hershey acquired a manufacturer of processed meat snacks, which is called Crave Pure Foods, to get on the trend of consumers wanting more protein into their diet, or clean protein. Mondelez acquired Enjoy Life Foods, that has a number of products, cereals, cookies, and bars that have things that are gluten-free, allergen-free, has no GMOs, halal and kosher as well. Kellogg's will be introducing Origin cereals that have things like ancient grains and muesli included. General Mills purchased Annie's Homegrown Organic Foods to put into their portfolio. A relatively large acquisition, gets them into the organic game with this well-known organic brand. And Campbell just introduced a line of organic soups. So again, the major manufacturers that have typically been dinged that they have a number of products they have, or their product line is saturated with products that have all those things such as preservatives and additives. Now they have other products in their lines that are very much in tune with what consumers want. Products that don't have those things, such as additives, preservatives, and so on and so forth. Retailers are also getting into the trend. If you look at their organic sales overall over the past 10 years, they've tripled. Looking at back in 2003, about a $10 billion market that's now up to $30 billion. We're seeing many retailers with their own organic brands. As an example, Safeway has their own organic brand name. We're seeing more dietitians working in stores to help design meals or meal ideas that meet certain nutritional guidelines. With Kroger and their KR Organics brand, that's fueling a lot of their growth. It's over $1 billion brand right now. And Target has revamped their selection of organic and natural foods that really emphasizes the natural quality and also the quality and flavor of those products within the offerings that they provide. Also, within the restaurant industry, we're seeing a number of initiatives. Subway just updated some chicken strips with no artificial flavors and preservatives. Chipotle just announced that they've met its goal with, that has no GMOs in any of the products that they're offering. Dunkin' Donuts announced that by the end of 2016 that they will not use any, they will use eggs only from poultry from cage-free, will use only eggs from cage-free poultry, and for pork from gestation crate-free, that are gestation crate-free. With regard to Yum Brands, they're phasing out palm oil. They're requiring traceability by 2017. They're cutting out preservatives, and they're switching to, eventually would like to switch to hormone and preservative-free beef. And then McDonald's is phasing in antibiotic-free chicken over the next several years as well. So in conclusion, what do we expect and what are we seeing? As we've said, the general economy is heating up opportunities in the food industry. We're seeing better prospects overall in the food service side. Also on the retail side, consumers are trading up again to better foods. We're seeing better prospects in the non-traditional channels, natural stores, health stores, non-traditional segments such as fast casual as an example. We're expecting more large, even mega deals in all channel areas. Money is cheap today. They're looking, as large CPG companies are not showing strong top-line growth, they're going to look to bottom-line growth, and mega deals are one way of doing that. We're going to see much more in a zero-based budgeting. That's going to be implemented a lot more widely as a way of growing the bottom line, as a way of, again, making companies more efficient. In the short term, whether the Cisco U.S. food deal is eventually approved or not approved, we're going to see smaller distributors will benefit. If approved, there's going to be some growing pains in terms of putting the two companies together. And with that, obviously, smaller distributors, which are a little bit more nimble, will be able to take some business. Also, they'll lose some business because of the way that the deal's structured. They're going to have to rationalize some of their distribution centers. If the deal does not go through, again, the confusion of the expectations that it would have gone through. U.S. Foodservice, what happens with U.S. Foodservice at that point? They've lost, significant amount of business. So what happens? Again, the smaller distributors are going to be able to benefit from that. Again, McDonald's is kind of in a state of flux right now. It's a big company. It has had problems in the past. It's eventually going to be fixed, but it's going to take some time. It's a big company. Trying to change direction for a big company does take time. And going forward, things like clean, pure, natural, local, those are all terms that are going to continue to be very strong going forward. Those are things that consumers are looking for. They're the name of the game going forward. So expect to see more activity from not only from manufacturers but from retailers and food service operators in the future. So in terms of our next Technomic Talks webinar, you may want to put this into your calendar. It'll be held on Tuesday, August 4th, and it will be the second quarter update. It'll be at 10 a.m. We will send out invitations to everybody. Regarding this webinar, everybody who has signed up for this webinar will receive the slides, I believe, at sometime later today. If you want an audio as well, that will be available on the website, so you can receive that so you can listen back as a reference. I'd like to thank everybody for listening today, and have a wonderful day and a prosperous second quarter. Thank you.